In this video, I want to talk a little bit about the eMinis. Now, this is actually the eMini Micros, and I want to talk about the last trading couple of days with the eMini Micros. Now, the first thing I want to mention is that this has been a real crazy time, and as you can see here from this Russell chart and this S&P chart, from the NASDAQ chart, and this is the Dow chart, that the market had this huge crash in here, as we're all aware of. And of course, we called that, if you remember, we did the Fibonacci projections. We were looking for this thing to come in here and make this big fall. We went back with our time zones and we were able to count those back in time against the previous history, and we knew something big was going to come along these lines. And it just so happens, of course, and this is the way trading is, it's like, how can you correlate those things? That little Fibonacci calculator didn't know that these tariff issues were going to be happening and coming all to a head at this point, or, the FOMC was going to claim that the stock market was doing, or the economy was doing poorly, and that was the reason why they had to lower interest rates, and that caused, kind of a convergence of things coming together that caused this market to fall. Well, that's the way trading is. You have your calculators and you put things out there, and then fundamental things come together and they kind of all fall together. It's an interesting aspect of trading, and I don't claim to understand all of it, and it doesn't always work like that. All we can do is just do our best guesses with our tools, and that's really what we're doing. That's why I call them a swag. We're going to make a scientific wild-ass guess, and then we're going to put our money on the table and say if it does what we think it's going to do, then we're going to profit. If it doesn't, cut our losers short and let our winners run. That's the name of the game, right? So in this case, in this situation, we were kind of anticipating a fall in price. So we had that in the back of our mind, and we were looking for a break, a longer-term break to the downside. For a day trading time frame, I was looking for interest rates to kind of move the market bullish, and they moved them bearish, and so there was a little bit of a daytime trading phenomenon going on in there that was a little different than I had anticipated. And then, of course, as the market turned and started to fall, we took short positions. Now, I took the short positions in the mini micro. I didn't do it in the mini account, and I've showed this to a couple people, and they're like, oh, well, that's great and all, but, that really kind of sucks that you only made $8,000 on this whole thing, when in reality, had I done the exact same thing in the minis rather than the mini micros, it would have been $80,000. Well, you can't cry over spilt milk. I mean, $8,000 is still a lot of money, and I didn't have to take 10 times the risk. I took, 1/10 of the risk on this particular event. And so, as you can see down here, we come in. I'm going to come down to the 60-minute chart. We got into this thing last week, and I'm just going to come in here, and I'm going to come up to view, and I'm going to hide all closed overs. I'm going to turn that off. You can see where we got in. We got in with 3 contracts, actually sold 2 at this point, and then bought 2 back. So actually on the Russell, we were short 2. We took two short off this position here as the market started to break, just before the break in there. And this is the 60-minute chart, and of course I did this down on the range bar 6 chart. I used the autopilot to get in during this time frame. I was using the fits and starts. If you're not familiar with the autopilot and the fits and starts strategy, send me an email. I'll send it to you. I have no problem giving it to you. It's lhturner@tradementors.com. And this market dropped, and this is what we did. We were able to get into this market using the fits and starts, and it got us in and held our position all the way down. Once we got into the market and the market started moving in our favor, I moved the stop to break even, obviously turned off the autopilot, and then I just attached the trailing stop to the 60-minute chart. Once it got down here, the market started to this happened early this morning, so I hadn't moved my stop in with the blue lights, and that's why we got stopped out a little bit further back than the blue lights. But as you can see, this is where we got stopped out, and this is where we're kind of sitting right now here on the Russell. If we come down and we do the same thing over here on the S&P, we came in with the S&P, we went short 2 as well, and you can see it did the exact same thing. Trailed the blue light down on the 60-minute chart. Once we get our stop moved to break even down on the small term time frame, 2 minutes or range bar 6 or whatever, then that's where I'll start moving out to the longer term time frames and out here to the 60-minute chart where we trailed down and exited out once again. If we come down here to the NASDAQ, we did the exact same thing, sold 2. Again, this is the autopilot doing this for me, got me into this market down on the shorter term time frame. You can see where we got in. Again, the autopilot did it on every single market, so we picked up every single one, and then got the reversal. And then down here, again on the Dow, the mini Dow, we did the same thing. So we were able to take advantage of each market, and sometimes this doesn't happen. I mean, they trade kind of the same, right? I mean, they trade pretty much the same, but they also trade a little bit differently down on the smaller term time frame charts. And so the fact that the autopilot was able to catch all three of those, or excuse me, all four of those, was pretty good. I'm pretty happy with that. Oftentimes what will happen is the autopilot will catch one or two of them, won't catch all four. But this time it caught all four. The market dropped hard, never looked back, and away we went. So this is the situation. I really like the eMini micros. I would recommend you take a look at them. It's a good way of getting into the market if you're a little bit nervous about putting out those larger trades on the micro, on the mini accounts, the mini S&P, the eMini NASDAQ, Russell, and Dow also have the mini accounts, and again, they're about 10 times the size, so you can make more money, but you're also risking more money. And the minis are not that they're not that big. That's why they call them the minis. I mean, there are the full size out there that just usually outrageously high for us small traders, and we don't trade the full size contracts. The full size S&P is huge, right? So why don't we come in here real quick and we'll take a look at the key, and I'll show you the differences between those three. I've got those three charts pulled up, as you can see here. This is the S&P 500. This is the mini S&P up here on top, and then the mini micro down here, right here in the center. So let's go take a look at the three different charts and see the differences between the three. Just do a quick comparison. The first thing I want to do is we'll just go to the full-size S&P and look at the key. To trade the full-size S&P, here's what you'd have to have for day margin. You would have to have day margin is $17,000. So you'd have to have $17,000 in your account to put on one position in the S&P. All right. The initial margin, if you want to keep it overnight, basically is $34,000, and the maintenance margin is $31,000. So let's draw a dollar calculator just from the top of this trend to the bottom, and that's $60,000. Okay, for one contract, $60,000 in the regular S&P. Of course, that number doesn't represent commissions and fees, obviously. So now let's come over here, and we're going to go to the next chart. Let's just go down to the mini. Okay, so that's the normal one. Let's go to the mini. So we're going to come down here. We'll go to the mini. And again, let's come to the key. And you can see day margin is in here at $500. So on peak, that's during the U.S. middle of the day time frame. That's a $500 day margin. All right. Off peak, it goes up to $1,000. You want to trade it in the middle of the night, day trade it in the middle of the night. If you want to hold it overnight, if you want to hold your position overnight, meaning over the close of the market and the open back up, it's a 23-hour traded market. So if you want to hold it over that 1 hour market time frame, your initial margin goes up to $6,900. Much better, right? Much better than the full size market. And this is the market that would been most popular. Still most popular. This is the market that everybody trades. All right. So when you're a trader, or you're a day trader, you're a position trader for the eMini S&P, and you want to be that type of a trader, this is the market most everybody trades. So you have to have initial margin, if you're going to hold it overnight, $6,900 in your account. Now let's draw a dollar calculator on here real quick. From this point here down to this point here at the bottom, that's $12,000. Okay, so a $12,000 move per single contract. So you'd have to hold it overnight. So that means you'd have to have $7,000 in your account. So a $7,000 margin account investment would turn into $12,000 during this time frame. Okay. Of course, that number doesn't represent commissions and fees once again. So now if we come in here and we're going to come back to our charts, we're going to go to the mini micro now. Now this is the mini micro. This is the one we call the Forex killer. All right. This is what's been dubbed as the Forex killer market. And that's because it's a small market for smaller traders. And it just has a tendency in the Forex market that you find that's where you have a lot of new traders and smaller traders. People who trade the futures market and day trade these markets are kind of graduates of the Forex market. They've left the Forex market and they've moved up to a more what I consider to be maybe a more professional market, and that's the futures market. And you can trade currencies in here as well. So they're real comfortable moving from the Forex market over to an exchange-traded market here in the futures market, still trading the currencies, but then adding in these additional markets like the S&P, the NASDAQ, and the Dow and such. So here we go. This is the eMini S&P Micro. All right, so let's look at the micro. Let's come over to the key. Once again, the day margin on peak is $100. So you only have to have $100 in your account to trade this thing. All right, if you're going to keep it overnight or off peak, let's do off peak first, that's $200. So, but if you're going to keep this position overnight, you only have to have roughly $700, $693 at this point, $700 in your account to trade one contract. Well, let's come over here and draw a dollar calculator again. From this point here to this point here, that's $1,270. Okay, so it's 1/10 the size of the regular mini. All right, so this is what we call the Forex killer. This is why this is becoming such a popular market. The great thing about it is you say, well, it's only 1,200. If I was over there trading on the other markets, if I was trading up here even on just the mini market, that was $12,000. Yes, well, you have more capabilities or more options, and I don't mean options on trading. I just mean you have more options on what you can do. You can come down to the mini micros, and rather than just trading one contract, you can trade 2, 3, 4, 5, 6, 7, 8, 9, 10. Once you trade 10 contracts, you're back to the size of the regular mini. So you have a lot of sizing capabilities that you don't have for the same amount of money or the same risk potential in the mini. So it gives you the ability to get in and have multiple trailing stops, different locations, multiple entries, multiple exits for the same risk or less risk actually. So that's why I'm excited about the mini micros. Is not just because 1-to-1 ratio. Yes, okay, it's smaller and it's not as big a risk. It's because you can break that quantity 10 positions up and do so much more with them for the same risk. All right, it's like taking one mini S&P and breaking it up into 10 pieces, and now you can trade the same risk as you're doing with one, now with 10. Just gives you a lot more options, a lot more capabilities for the same risk potential. And so we come down to the mini S&P, and that's one that we're all used to trading, but these are brand new, these new micros. And so the micros are a lot of fun. Again, if I'd have been on the mini, that would have been an $80,000 profit, but because I was on the micros, it's $8,000. So that's still not such a bad week here on the eMini micros. The number one question I get when people watch my videos is they want to know what software platform I'm using and what indicators I'm using. First and foremost, if you come to our website, tradementors.com, you'll notice that we have a section here called Tools for Traders. If you click on Tools for Traders, the software tools in here are listed. And you can see the recommended trading tools. We have the live trading platforms that we use. These are from Track and Trade Live Futures, and Track and Trade Forex. If you click these more info buttons, you can find out more information about the platforms we're using. I also use a plug-in to the live futures version that is called the Bulls and Bears. That's the Bulls and Bears is what turns the price bars red, yellow, and green and gives me the Elliott Wave blue light system. And so that's a plug-in into the live version of Track and Trade, and it works on both the live futures as well as the live Forex. Now, some research tools that we love and that we have here listed as well are the Trade Miner tools. This is Trade Miner for stocks, futures, and Forex. This is one of the research tools that helps us identify the fundamental nature of markets. And then, of course, we have News Miner. If you want to have a little bit of information about the tools that we use here at Trade Mentors, come to our website, www.tradementors.com, and click on the Tools for Traders button.